Hey, what's up, everybody? So we are going to talk about a trade setup today, like normal. And this trade setup, don't really have a name for it. It's just a retracement trade setup, and it kind of goes using the Martingale betting strategy, Martingale system. Basically, all the Martingale's betting system or strategy is, if you haven't heard of it before, is when you increase the amount of money that you're using per trade as it goes against you. And so it's typically known for, like in the betting world, like blackjack, roulette, and stuff like that. And but you can also use it obviously for trading, which you've probably done if you trade like stocks. I know the way I do in stocks, like you get in at a certain price. Say you buy like just using round numbers, $100 at $50 a share. Well, say it goes against you, it goes down to $40. Well, then you buy 200 shares at $40. So then you are buying more shares as the price goes against you to reduce your cost basis and to get you in a better price. So basically, its key takeaways: the Martingale system is a methodology to amplify the chance of recovering from losing streaks. It involves doubling up on the losing bets and reducing, well, we don't do reducing winning bets by half, but basically what you're doing is you're doubling up on your losing bets that are going against you. And it promotes a loss-averse mentality that tries to improve the odds of breaking even, but also increases the chance of severe and quick losses. That is true. And yeah, forex trading is more well suited for this type of strategy than for stocks trading or casino gambling. So I do agree with that, because when I first started doing it, it was in the forex, just because you have a lot greater of leverage to be able to use it. And this is also when you could use a lot more leverage than what you're allowed to here in the US as far as what you use for forex. But for this trade setup right here, this is the way it works. So this is live trading right here in the Nasdaq. We'll go over here in just a second, but it can be a little bit confusing to look at it. So let me just start off. Let me start off by like this one right here and show you how it works. So all you're looking for, I use these semaphores that just kind of helps you, gives you a anchor point to go off of. And all I do is, let me show you I have two different Fibonacci ones. So what I do is draw it from down here at the bottom, and all you're doing is looking for going up to a high and then retracement at least back down to the 50% level. You know what? Let me put where is it? This on. So let's see. There we go. So there's, you can see the bottom right there. There's the high. Then you have the retracement down here to the 50%. So just these green lines right here for the Fibonacci retracement level, between the 50% and 61.8. So price has to retrace back down there. Then it has to go up there and hit the 1.146 level, which this one did. So now that had happened, this is a set one that we're looking for. So I'll go ahead and change this template to this one right here. And what this means right here is when the price comes back and hits the 50%, that's your first entry, and then your exit is 38%. But if that doesn't happen and price goes down and hits the 68%, you get in at 2 contracts, then your exit moves to the 50%. But then if price keeps going away, which it doesn't happen, it happens, this is the least amount of times this happens, is when if it goes down all the way to 78.6, but it does happen from time to time. You get it down here at 3 contracts, and then your exit is just above the 61.8%, and that's how you get out of there. If price keeps going away against you, well then, good luck. Oh, just got out of that one, but I haven't seen it as far. Let's see, did it get me out of this trade right here? Yep, so this one just worked right here. Let me go take... So this is a live one that just worked right here. So using, let's show how it works. So using, there's the high. So coming down here, let me show you that. Retracement trade. See, there you go. There's the high. There's the low. Price came back up, hit the 50%, and then went back down here and hit the 1.146. So that is how that works. So then price came up here. There's the 38 you hit, there's the 50, that was the first one I got it on, and then you can see I had my exit right down here, and that's where it just got hit. And then I had, let's move this down a little bit. I had the price right here, the 2 orders set to hit right here. These are just micro contracts at the 61.8, and then the exit for that one is right at the 50%. So we'll go ahead and get rid of that one. Then I had 3 contracts up here at the 78.6 Fibonacci retracement level. And then the exit I have down here for it is not right on the 60.8, so I've noticed it typically, when it gets to 78.6, it goes a little bit lower. So getting it down to the 61.8%. Then after that, I haven't seen, and to be honest, I haven't seen it go really much higher than 70.6 without at least giving it a little pullback to go in there and hit that. You know, it can, of course, the market just shoot way up, but from what I've seen, when it hits this area from where it has, it at least gives you some type of mini kind of pullback right there before it continues on the way up, if it continues on its way up. And I guess the theory behind that is just like in here, because as you can, let me take this off so I don't forget about it. As you can see in here, this is just a typical A, B, C, D move right here, and that's what we're basing this off of. A, B, there's the C, and then the D, you know, all the way down for however you want to go with it. But the point is it hit the target down there, so I created the A, B, C, D move for it. And so within that, it just seems to be there is still some contracts to get processed and everything, maybe some ones that missed or whatever, or maybe some people getting up here, they viewed this as an exit point who, you know, got in back down here or something like that. And so that's basically just how it works. Now it doesn't hit this area every time you get a drastic pullback, you know, that'd be awesome. But it does hit it. It gives you at least of a pullback to get out in one of these areas. And so that's the reason why you'll have like one contract right there, two contracts right there, three contracts right there. I'm sorry, I messed that up. One contract there, two contracts there, and three contracts right there. So one contract at the 50%, two contracts at the 61.8%, three contracts at the 78.6% right there. And then the exit you have are, from the first one is down to the 38% line, the second one down to the 50% line, and the third one just slightly below, a little bit down in here, the slightly below the 38.6 line right there. So either way, you're going to stand it to get some profit from this trade setup. Like I said, I just haven't seen it just blow past this without giving it some type of retracement. But the key to it is making sure on this A, B, C, D retracement trade setup that you have the A, B, C, D, and the price at least comes back to the 50% for the C level for it right there. You can see this when it came back to this 61, pretty much 61.8% right there as it's measured. And so that's the key. If it doesn't come out to the 50%, do not take this trade setup, because I have seen it. I was looking at only taking it to the 38% and then saying that worked, but I have seen before where it only hit the 38% and not the 50, and when price came back to it, it just blew right through it. So I would not do that. That's why the key is making sure it hits the 50% for the ABCD move, so then you can have these over here. Let's just show some other things. You can see over here, got these set up for it. I'll probably put some down here down for these. I'll just show you how it works. So again, here's, we're just using this low right there. There's the high. All right, let's see here. So price definitely came down to the 50%. It did not go below this low here. Obviously, if this low right here went below that one, it'd be an invalid because this wouldn't be an ABCD move. So then we just to make sure, A, B, C, and then it for sure, see the 1.146, hit that one up there. It went higher, but that doesn't matter. So hit that target. So it has the what we're looking for. You can see it came down even slightly lower than the 88.6%, so we're good there. So then I just change the, I'll just show you the Fibonacci settings here real quick. See the zero line, 61.8, 50, and then negative 1.146. That's what you want. And then going over to the retracement setup for it, we have the 38% line, 50%, 61.8, 78.6%. So we'll go ahead and put these orders on right here. So 64, trade, buy, go down to 1, adjust it to just below the 38%, just ensure you get out. And then we have 75, trade, buy, 2. Let's adjust it. We'll put it kind of right on it. Yep, there we go. And then for the third one, 50, trade, buy, 3. And we'll have that one just slightly above it right there. So for sure those two stay, and just you get about 2 ticks of profit right there, which is fine. And then the big one is going to be that move right there, assuming this one comes down. We don't know if that's going to happen today or not, but as you can see, the good money is that it goes down here to 70.6. It can be scary. I mean, you could, if you wanted to, if you want to make sure like that you can't have a stop loss. And the stop loss I would have would be right under here. It'd be under the A move right there. You see just under it, because if price does continue to blow through that, then there's a chance you're going to get a deep decline for it. And yeah, you would take a pretty substantial loss for it. But for what I've seen, the win rate on this is very, very high. So if you do want to use a stop loss for it, I'd have the stop loss just under the original swing point low, the A right there from that A, B, C, D move right there. That's where the stop loss would be for it right there. And that's basically how the trade is. Pretty simple trade setup. This obviously is kind of a retracement trade. It isn't a what's the word I'm looking for? Trend trading setup. You're waiting for it to come down. But the big thing to remember is when you're doing the A, B, C, D setup for it right here, A, B, C, and then the D can be whatever. You just have to make sure it hits the 1.146 right here, which it did. You can see plenty hit it right there. You just have to make sure that the retracement comes down to the 50% line right there. If it doesn't, then it's not a valid trade, and don't take it, because there will be plenty of opportunities to take it. But yeah, that's how it works. I mean, it can work in what I've seen in every market. We can look at. Let's see here. We want to look at some stocks for it as well. Let's see here. Like here's one for Tesla. So if we use, there's the high. It went down. Obviously hit the 51.8%. Let's see here. A, B, C, and then there's D all the way down here. So if we look over right here and see what happens for Tesla as it goes up, so price come up and hit the 50% right here, blew through it, hit the 61.8, and then came down back down right here and hit the 50% to take it out right there. So for that trade setup, it would have been, how much is that gain? 5% gain right there. So that's why I like using this more so on futures than stocks, just because in stocks there's not a big enough profit potential for it right there. So, but yeah, I mean you can, but I like using it better for futures, just because there's more profit potential. So yeah, that's how it works. If you want to look at the long-term S&P 500 right here, let's see here. I don't think we're in any right now. Let's see about this one. I think this one hit the 38%. I don't know if it hit the 50. Oh, it did. Okay, yeah. So this one will work. So look at this. So let's get rid of this one right here. So in the S&P 500 long term, this is weekly chart right here. Look what happened right here. Here we have the low right there. So let me just draw the A, B, C, D. A, B, C, D. So as you can see, pretty much, it went down, hit the 50% right there. So ABCD move, so that is good to go. So we just change it to the retracement trade setup. And then we just wait for the pullback. And then this is when we had the COVID sell-off right here. COVID came down, hit pretty close to the 50. I mean, just a slight tick away, went up and hit it, but it didn't matter because then it went down and hit the 61.8, then easily hit the 50. So, if you didn't get in right there for it, if that wasn't considered be, said and done, it went down and hit that one and used that support. And then ever since then, price has been in a big uptrend ever since. And so that's what you'll find also a lot of time when you do get a pullback like that and you get a strong bounce off of it, or if it's going down the other way, it comes back up and continues to go down. You find a lot of times that it does use between this 50 and 61.8 based upon a previous move. It's kind of like the springboard area for it. So it's just real interesting to find out. And that's one of the reasons why I created this trade, and obviously one I'm using as I showed just a little bit ago, because I've seen a lot of movement from this area from trades that already happened. But again, the key is making sure when you do get that original retracement, it goes down to at least the 50%. So anyways, so that's the trade setup. Hope that helps you in your trading. You don't have to use it exactly the way I use it, but I just wanted to show you that is a trade setup that I am using at the moment. So hopefully it helps you in designing your own trades. All right, take care out there. Thanks, bye.